What's going on, good people? Man, I hope all you guys had a good week. It's been a long week, I'm sure, for a lot of people, but welcome back, man. Welcome back. I do want to say, before we get into it, I do want to say just a couple quick things. I hope everybody out there is being safe. You know what? Hold on. You know, it's the same old mix, Crown Apple and Coke. Actually, it's Crown Apple and Sprite today, so see how that go. But I did want to say, I hope everybody out there is being safe, being smart. Black lives matter. Black money matters. The only way to bring about change, not only here in the U.S., but in the world, and I will say it is a good thing to see so many people get engaged, so many people peacefully protesting, not only here in the U.S., but across the world. And that's how much of an impact this particular issue has. But the only way to maximize the productivity of not only the current generations, but generations to follow, to have trust, united trust, you know, that trust that brings everybody together and allows everybody to realistically have the same ability to have those same kinds of goals, is equality and equity. So again, continue to be safe. It's a beautiful thing to see so many people not just talking about things, but taking action. We just encourage that that's done in a safe manner. What we don't want to do is for the small percentage of people who are out here looting and doing things of that nature, of course, stop it, sit down. But if you are new here, my name is C. Nell, short for Cornell, how I see it. Today's video, man, I just want to hop on and give my Robinhood Challenge update. This is Robinhood Challenge update number 7. On my channel, some of the things you will see are videos on finances as a whole, investing and things surrounding investing. I do give these videos, which is my Robinhood Challenge update videos, and that's where I take you along on my Robinhood Challenge. My goal is 100,000. It's going to take some time and persistence to get there, but we will get there. My hope in all this is that you get inspired, if you haven't already, to start your own journey, man. If you are interested in a free stock, I'm going to leave my referral link to Robinhood and down in the description. All that allows us to do, both of us, is to get a free stock. If it's something that you're going to do anyway, go ahead and use the link down below. That's just going to show some love to me as well and allow not only yourself, but both of us to get a free stock. So I would definitely appreciate that if that's something you're interested in. Again, it's going to be a link in the description for my Robinhood referral code. You will also see on my channel, I do have a couple funny videos, but they're budgetary videos, just overall finances. I think it's something that I want more people to jump on. We've all seen the statistics, and this channel, I say it's for everybody, but to me, this channel is more for the folks who are tired of being sick and tired. You know, the beginner investors to intermediate investors, folks who are looking to make a change in their life and do something different. We're at that point to where they can stare themselves in the mirror and give themselves the truth. So if that does sound like something you're interested in, I would definitely appreciate it if you join the community, join the family. Go ahead and like the video if you haven't already. Subscribe to my channel. Without further ado, man, let's make it happen. So investing balance on the portfolio now is right at $8,396 or $8,397. And I'll start off by saying, let me get this part out the way. But these are thoughts and that are on my mind. Looking at the market now is crazy. The market is so detached from what the reality is that we're living in today. Yes, unemployment, went down. It's still horrible. It's at 13+%, and that's not the real unemployment rate, of course, that encompasses. We do know there are more than 13 million people, or 13% of people that are unemployed. But anyway, it's so detached from reality. It's so detached from what's actually going on in the world. But in my humble opinion, again, let me throw this out there and say, I'm not a licensed professional. I am just a humble guy here on YouTube. I'm giving you my opinion and how I see things. So this should only be taken for entertainment purposes only. But with that said, in my humble opinion, if you look at the market, it continues to go up and up and up. I think every bit of positive news is baked into the market. Every positive assumption is baked into the market. And in my opinion, that's why we're seeing what we're seeing. The market is acting like nothing but positive assumptions, meaning it's already incorporated that all the businesses and really essentially the world will continue to open up. There won't be any hiccups down the road, any flare-ups with the pandemic. Again, businesses will continue to hire and add more and more people back, and businesses will continue to thrive and open up, and I would hope that would be the outcome, and I think we all do. To be real, we all do. Because we don't want any more deaths. We don't want people getting sick, and we don't want, because these are friends, family members. These are members of our community. So that's the most important thing of this all. But I'm also a realist, and the science shows us that that's probably not a likely outcome, right? So my mindset is that we're probably going to see at least another dip or some more dips across the near future, realistically. Here in Texas, San Antonio, yesterday on our local news update, we had the biggest jump in cases we've had in a while. So, with that said, and as you watch the news, that's happening all over the country, all over the world. So, again, like I said in the intro, man, just be smart, be safe, whatever you guys are doing, be smart and be safe. Make your own decisions and go by you looking at the facts, and do the best you can to protect not only yourself, but your family and your community. So, with that said, let's get into it. So, of course, today is Saturday, it's the weekend, but on yesterday, the one day, up 3.31%, roughly $268. After hours, it continued to go up roughly about $39 for 46 hundredths of a percent. I had to flash back to like high school, right? That was like tenths, hundredths. Okay. Anyway, on a 1 week, I am up 11.42%, or roughly $860. On the month, I am up 28.31%, or roughly $1,853. On the 3 month, I am up 35.98%, and that translates to roughly $2,222. I started this portfolio February 8th of this year, 2020. So I guess we could do the year because it's technically been over 3 months. And for the year, I'm up 31.75%, and that translates to in dollars roughly $2,024. So again, letting you know my thoughts on what I think is going to happen. Do I think that everybody's going to keep winning and stock, the market's going to continue to go up, the S&P 500, and no, I don't think so. But again, I think the market's operating on every positive scenario being baked in. So anyway, working down into it, we'll get into our first stock. My first stock, which is Aurora Cannabis. There are obviously other cannabis companies. I did have one share of Canopy Growth. It's a pretty popular company. I actually sold my one share of Canopy Growth. There's been some turbulence with Canopy Growth, but that's not why I sold the company, because from the onset, I've always thought that Aurora Cannabis had a little bit better opportunity. I mentioned Canopy Growth because I think if you're interested in investing into this industry, it's a name I can throw out there that if you're not familiar with, I would highly encourage you to go look into the company, the opportunities of the company. It is a Canadian cannabis company and it's backed by the Canadian government. The rapper Drake, that's my boy, but he also has some pretty big dealings with Canopy Growth from a business standpoint. So, but I highly encourage you to check that out. Don't just go and get it because me or somebody else on YouTube mentioned it to you or said they're doing it. Just go look at it. So I will be throwing some stock out there, some names of companies that I would like for you to go look into if you're interested in that particular market, right? But again, do your own research and make your own decision. So anyway, so for Aurora Cannabis, I did increase. I bought 5 shares of Aurora Cannabis off the top of my head. I remembered. I'm surprised. So I bought 5 shares to bring my position to 70 shares. Average buy-in of $12.53. So right now, total return, I'm up roughly $98. So again, that's short term. That's the short-term return, but with Aurora Cannabis specifically, I'm looking long-term, several years down the road in my opinion, for this particular company to really make some moves and really see that growth. Next, we have Nike. I did increase my position in Nike, so I bought like 3 or 4. But now I'm at 10 shares with Nike. Average buy-in is $73.36. Obviously, I wasn't able to average that down with the price of the stock going up, but I'm happy with my average buy-in. I know a lot of people get caught up in that and say, "Oh, I don't want to buy anymore." Well, for me, in my opinion, Nike's a great company, and I think you have to focus on. So many people are fixated on trying to time the market. If there were people that could do that consistently, they would own the entire world. It just doesn't happen. You can get lucky. Like for me, luckily I started investing in a bear market, so everything was cheap. So I'm able to have these low buy-in costs or average costs per share. And again, I go back to that Warren Buffett saying, and essentially what he's saying is, it's always better to buy a great company at good value versus great value on an okay company. All he means in that is, and all I'm saying is, it's always going to be wise to buy great businesses and invest into great businesses. I know everybody's all hyped about, recession-proof stock. You should have been doing that from the get-go. If you're doing your research, again, it goes back to that. If you're doing your research and you're investing into solid companies, looking at their financials, looking at what they do, looking at their history, even if it's on the dividend, the dividend side of the house, nothing changes. It's the same analysis. You may add, the history of the dividend, how often they increase it, if it's been increased consecutively across the years, if they're a dividend aristocrat, whatever, but you have to look into all that. And the point is to set yourself up, or whoever you're building this for, yourself, your kids, your family, you want to set yourself up with strong businesses. You may take your shots here and there on companies you believe in, but do it because you believe in it, not because some YouTuber told you that they believe, so you should believe. Do your research, man. Do your homework. This is your hard-earned money. The primary functionality of this public portfolio is dividends and having a dividend-paying portfolio. So I will focus more on that. And I think I'm going to clean it up and really focus just on the businesses that I trust. From doing my research, doing my homework, and businesses that I personally invest in. And I think that's, for a beginner investor, you don't have to know everything about every company. Look around your crib. Look at your life. If you got kids, look at what they participate in. Do they like Disney? You think Disney's going anywhere? You think Disney got some good opportunity? As long as kids are being made, they probably got a pretty good opportunity. But from that, invest in things that you are consumers of already and companies you believe in already. Still do your homework, look into the companies, because you never know what the outcome, the long-term outcome, what is their, for that particular company 10, 15, 20 years down the line, what may be some of the challenges. Are they just going to be stagnant and not really grow? So start there, look around you, and Johnson & Johnson, I'm pretty sure if y'all look around y'all crib, y'all got something from Johnson & Johnson. Do you think they're gonna go anywhere? How long have they been here? Things of that nature. That's what you gotta look at. So anyway, AT&T is one of those for me. I did increase my position with AT&T. Now I am at 22 shares. Average buy-in at $30.72. Right now, the total return is $43.73, and that's roughly 6.5% increase or gain for that particular stock. So again, I'm now AT&T has a dividend yield of 6.54, and that ticker symbol is T for AT&T. So and I'll just flip through this so you guys can see sort of what AT&T's been doing. We won't give everything, right? What you guys can see it there. Boeing. This is a company that I've just watched previous videos. I won't do a deep dive now, but I've talked in length about Boeing. I will absolutely continue to invest in the Boeing. If you look at it now, Boeing is trading at, and Boeing ticker symbol BA, is trading at $206.80 per share. Currently only have 3 shares. Again, I will continue to build a bigger position with Boeing. As of right now, my average buy-in is roughly $38. And so far, total return is roughly $207, or right at 50%. So I will continue to, again, build my position in Boeing. I think it's a great opportunity. I think it's a great business that is still on sale. They do pay a dividend of 6.44%, but I went ahead and did get another one to bring my position to 3. So we'll keep building that out. And I'll flip through this so you guys can see that's on a monthly, on a 3-month, in a year, and that's for that particular company. Realty Income, ticker symbol O, is currently trading at $62.60. I did increase my position with Realty Income. Now I'm up to 8 shares with Realty Income. Average buying cost of $53.58. Total return on Realty Income is $72.15, or that translates to roughly 17%. So I will continue to build on that. They are a monthly dividend payer. Most importantly, how they're structured. This is pretty popular. If you're a dividend investor, 9 times out of 10, they're probably going to have Realty Income in their portfolio. But it's a very solid company. It's dependable. The track record is awesome. Even if you look at the analysts, they're saying buy or hold. Either one, but there ain't too many people really selling Realty Income. That's one of those opportunities you see, and you just want to continue to build a bigger and bigger position with that particular company. So that's just my opinion. You make, again, I'm not a licensed professional. You make your own decisions, but track record is pretty solid, bro. So looking at it, and like I said, they pay dividends on a monthly basis. And their dividend yield is 4.65%. So, and I'll flip through that just so you guys can see the performance of Realty Income on a 1 week, 1 month, 3 month, and we'll just do a year. Next we have Tesla. My neighbors, actually 2 of my neighbors got a Tesla. And it's funny because they just put a new Tesla charging station right up the street from where I'm at. So Tesla. I won't do a deep dive into Tesla. You watch previous videos, or if you'd like for me to do a deep dive in any of these companies, or sort of my reasoning why I'm so high on these companies, just leave a comment down in the comments. Let me know. Or if it's a particular stock that you want me to comment on or give you feedback or my opinion on, or a stance that you want me to sort of give you feedback on, just let me know. Hit me up in the comments. But Tesla. So I am about to start adding more positions to Tesla, but I'm the same with 2 shares. Of course, the equity went up, but again, it's short term. It's not a big deal. We think long term. Investing, you have to think long term. Unless you're day trading or something like that, which I don't encourage. It's a potential to lose all kinds of money. It's the stock market, and for me, you have your active investor and inactive investor. An inactive investor is typically what you're going to see a dividend investor. We want to buy into good companies and just buy and hold. We don't want to have to be actively on it every day trying to, oh, it went up, let me hurry up and sell. That shit, it's too much. It's too much. We got other shit going on in life, right? You got a job, if you got a family, you got kids, you got stuff you want to do. It's too much. So particularly for me, I'm an inactive investor. I want to just invest in the good companies. I do think one day down the line, Tesla will pay a dividend, but obviously this is one of my growth stocks for now, and I just see Tesla not necessarily taking over the world, but definitely changing the world, and they're already starting to. I mean, you saw with the SpaceX, and it's crazy. So anyway, let me know, hit me up in the comments if you want me to do a deeper dive. But on a total return basis, I am up $672.30. That translates to roughly 61%. But we'll hit the 1 week, the 1 month, the 3 month, and the year for Tesla, and we'll keep it moving. Southwest Airlines. Long story short, my average buy-in, and I did increase my position to 9 shares. Average buy-in for Southwest Airlines is $28.08. Hold on, let me get a drink. All right. Yeah, so $28.08 average buy-in. Total return is $93.74. That translates to roughly 37%. In Suncor, I didn't increase my position with Suncor as of right now. I'm actually debating how long I want to keep Suncor. We'll see. We'll see how that goes. But my average buy-in is $16.04. Total return is $26.32. That translates to about 33%. Equity position of $106.50. Suncor, we'll go through the 1 week, 1 month, 3 month, and 1 year. I'm debating on Suncor, and I'll let you guys know what I decide. If you're not already following me on IG, I am putting it up probably somewhere up here on the screen. No, follow me, man, on IG at CNell How I See It. For my daily moves and things of that nature, I do more of those updates as in real time, or on a daily or every other day, every couple days. As I make moves, I tend to put them on there. So. But I'll let you guys know, and then like I said, it'll probably be on IG what I decide with this particular company. I'm going to continue to do some research of my own before I make that decision, so we'll see. Moving on, new residential investment, ticker symbol NRZ. I am trying to steadily increase my position with this company. It's a REIT, and what I want to do is, and I'll probably do this here in the near future, is a video on dividend investing, but not all dividends over the long term are equal. You may not necessarily get the tax advantages that with a REIT as you get with a traditional company. But I'll probably do a video here in the near future diving into that. So I think initially we all gravitate towards REITs because they tend to pay those dividends, whether it be on a monthly or a quarterly basis. They tend to pay those dividends, and it's a good way to diversify your portfolio. So I did increase my position with the company. Now I'm at 105 shares. My average cost or buy-in is $6.95. A total gain of $183.21, and that translates to roughly 25%. So again, and they have a dividend yield of 2.42%. We'll bounce through. Then that's 1 month, 3 month, 1 year. Of course, everything's looking crazy right about now. We'll keep it moving. Again, another REIT fund. This is Vanguard. So I only have 1 share, and I haven't really done too much with this one. Again, that's one of those other ones I'm really debating on, and we'll see. I'm trying to look and see if my money could be better spent elsewhere. I do know the performance of this fund is pretty solid, so I'll keep you guys posted. Again, follow me on IG for the updates on that. IBM, solid company. I did not increase my position with IBM. No, feels like I did buy one. No, I haven't. So it's just the same. IBM currently, we'll run through this pretty quickly. Total return of $35.78, roughly 16%. My average buy-in is $114.17. Equity position of $264.12. We'll give you a quick rundown: 1 week, 1 month, 3 months, and 1 year. I will continue to build my position in IBM. Honestly, right now, it's just not a big priority to me in terms of continuing to build in IBM. I will, but right now, I think I have other focuses like the AT&Ts, like the Realty Incomes, and a couple other like Tesla. So, and next, Synchrony Financial. I didn't increase my, no, I bought one. I apologize, I bought one. My average cost down $17.95. Total equity position of $80.97. Total return so far is just over $27, and that roughly translates to about 50% gain. So we'll see how that goes. Again, this is a long-term play for me. They are a dividend-paying stock. The dividend yield of 3.62%. I think that's a great opportunity. Same with Chimera Investments. It is, and this is ticker symbol CIM. Currently trading at $10.75, or for the last known price on the last market day, which was yesterday, Friday. It's $10.75. I'm currently at 11 shares. Average cost of $7.33. Total return of $37.64, or roughly translates to about 47%. I will continue to build that position with Chimera, as mentioned before, and we'll just get into the 1 week, 1 month, 3 month, and 1 year. So let's keep it moving. LTC Properties. I definitely will increase my position with LTC Properties. That's one I didn't touch, or I haven't done it yet, but coming soon I definitely will be. I'm still at 1 share. My average buy-in is $32.30. So it's a gain of roughly, total return of roughly $10.12, or roughly 31%. Equity position of $42.42. So now I want to show you guys really quickly the dividends and how that looks. They're starting to roll in. So let's jump into it. And again, the point is to continue to build positions with good companies that have a solid track record of not only paying the dividend, but increasing that dividend. NRZ dividend. So if you look up the dividend and work, this is 30 days from the very bottom, NRZ, and work your way up. This is working up into the future or till current time. If you just look at those dividends that are being paid out. Now, again, they're small amounts now, and you can see the corresponding days, and then these at the top are the ones that's coming up, that's pending to be paid out to them. Again, these amounts aren't large amounts, but as we practice consistency and think long term and stay consistent with whatever kind of investor you are. Me personally, I prefer having a dividend paying portfolio. At least the bulk of my portfolio, the public account, will be dividend paying, because I want to get to the point where I can supplement some of my income, if not all of my income, and down the road in the future with these dividend payouts. Everybody got different goals. I was talking with my boys. He was like, man, I'm gonna continue to invest in Exxon. And of course, by the way, yesterday Exxon had a pretty good performance. I don't know if that I will, but I'm not mad at him for doing it. But anyway, he's saying, I want Exxon to start paying for my gas. I said, I ain't mad at that, bro. I ain't mad at that. Like that's the power of those dividend payouts, right? As of right now, of course, early on, your focus should be reinvesting those dividend payouts. And again, dividends are a company's cut to you. It's essentially they're paying you out of their profit. They're paying you to invest into the company. That's a thank you. Hey, thank you guys for investing into the company. So we want to reinvest those funds back into the market and back into building our portfolio and let that compound interest and that growth take hold, right? So a lot of people miss that point as well. They miss that point of, well, I'm gonna have to put in all this money to be able to get like decent returns on dividends. Yeah, but you're not the only one putting in the money. You're getting these dividend payouts as well. Or you'll hear this, well, the amount or the cost or the price of the stock decreases the same amount at, when they give the dividend payouts, you'll see the price of the stock itself decrease that same amount. Not every time and not always, but guess what? The last 100 years of the stock market has shown us good companies tend to keep doing this. It may be a little rocky up and down, but for the most part, eventually there's growth there. And that's the last 100 years is, looking at facts. Hashtag facts. So I want my dividend. That's free money. Give it to me. You're paying me money to do something I'm already going to do anyway, which is invest. Right? Anyway, good people, and we'll keep this thing pushing. I'll be back in another 2 weeks with a specific investment video, but I'll try and do, this week has been a long week. I'm gonna try and get another video out tomorrow. I got a lot of crazy stuff going on, but moving forward, typically what you'll see is we'll see each other every Wednesday and every Friday. So that's the wrap up, man. That's it. That's all I got. That's it. Okay, I just had to do this. But no, but I appreciate you taking your time out to rock with your boy. Please go ahead and like the video. It helps with the YouTube algorithm and it allows me to reach more people and share this content with more people. And as well, join the community, man. Rock with your boy, man. Rock with me. Go ahead and subscribe to the channel. But with that said, till next time, good people, much love. I'm out.